Welcome back, traders. This is Spencer with Numbers of Finance. We are back with a weekly wrap video for the week ending Friday, April 26, 2019. Starting off this video, we're going to be taking a look at SPY on the weekly time frame. As we can see, we printed a weekly close about 2 percentage points up from where we started this week. So again, we have another continuation of the strong bullish push up that we've had. On SPY, what's important to note about this price is that we are coming up very, very close to this 293.94 level. We closed today at 293.41, so we are well within a percentage point of the all-time high on SPY. Moving over to QQQ real quick, we can see we've actually pushed up and made new all-time highs this week, so pretty significant for the tech stocks. We closed at, the high was at 191.22, so we'll see if we can keep pushing past. Now moving back to the daily charts on SPY, we can see that as of today, the bulls have regained the price action, and what I mean by that is what we can see today is that comparing today to the candlestick that we made yesterday, we made both a higher high and a higher low, whereas Thursday's candlestick, we made both a lower high and a lower low that was, a lower low. That was the bears gaining some amount of control, but the bulls regained it very quickly today. Also important to note, if we zoom out on this daily time frame, we're continuing to build momentum downwards, which is shown very clearly on both the MACD. We can see the momentum is pushing down, whereas the price is moving high. And on the RSI, while the RSI is not necessarily moving downwards, we can see that we are reapproaching these incredibly overbought conditions. And so again, there certainly is potential for somewhat of a pullback. But the trends that we've been seeing for months on end now is that the market is very resilient, and so we'll see if we can if the bears can finally break that trend. Now, there were some significant developments today that might indicate that a significant pullback is imminent. But again, we've seen these again and again. We've seen these sell-off signals where trend lines are broken, where we have these micro-term divergences on the 1 hour chart. We've seen these multiple times now where sure, they might give you a percentage or two of pullback in the broad markets, but nothing significant, not the significant leg down that many people, including ourselves, have been looking for. So the first of these major sell-off signals that I mentioned previously, and what I consider to be the most important one, is XLK, the technology sector. We've talked about this quite a bit. We've gone into great detail about how we believe that if we are entering into a recession, into a prolonged bear market, and that Q4 downturn that we had last year was just a sign of things to come, but if we are to keep going down, if this was just a bear market rally that we had, the thing that's going to bring us down is most likely going to be the tech. So it's important to keep an eye and keep a look at what tech is doing, and as we can see today, we clearly broke below this trend line that has been holding up since the December lows. This trend line has done a very good job. Let me actually go to the 4 hour chart. It highlights it quite a bit better. But what we can see is this support trend line that's the bottom of this wedge that we've been forming. We had 1 tag at the reaction low, 2 tags at a second reaction low, 3 tags, 4 tags, and then for the past couple of weeks we've been running along it. And finally overnight, and actually a little bit into the end of yesterday, we started to break this trend line. Now it's not impulsive. We don't have the volume spike that we want to see. But it's something to keep your eye on to see how it reacts over the next couple of days. Now, obviously this is the end of the week, so we'll see what next week does. But this is the kind of thing where if the bears are going to regain control of the market, which they have not had control for many months now, but if they are going to regain control, this will probably be a very clear sign. If we continue to have sell-off here, if we start to get some impulsive selling here, we start to see a couple percentage points move down off of the support trend line that we just broke. That certainly could be a sell signal for the broad markets. And the second and also a very significant thing that I want to touch on is crude oil. Crude oil has been lock and key with the broad markets for a couple of months now. We can see they had the exact same reaction low back on December 25th, December 26th. And ever since then, crude oil has just been shooting up and up and up, just like the major markets. And what we can see in crude oil, it's kind of a chicken and egg thing. Which one came first? Is crude oil what's going to bring down the markets, or is the markets going to be what brings down crude oil? Or maybe they're just going to stop going lock and key. It's hard to say, but if we take a look at the past couple of months, it has certainly been a very strong correlation to the broad markets. And what we've seen, very similar to XLK, we have this prolonged wedge forming over the course of a couple of months now. We have reaction low here back in December. second reaction low, third test, and then we've came up, and just as of today, we have impulsively broke it. Now it's different from XLK. XLK kind of limped through this support line, whereas on the crude oil futures that we're looking at, we can see we very impulsively broke it. We're over 2 percentage points down from that trend line, and as you can see down here, the volume very clearly was a spike once we broke that. So another interesting thing to keep your eye on: we don't have the major sell signals. XLK and crude oil right now are giving us very clear sell signals for those specific assets, but we do not have the same sell signals for QQQ and SPY. And actually, I'll just pull it up to show you. So here we're looking at QQQ on the hourly chart, and pretty similar up until the past couple of days to what's been happening with crude oil and XLK, where we're forming these very long, prolonged wedge patterns. And QQQ, actually, unlike XLK and CL a couple of days ago, broke to the bullish side, and a fairly impulsive break at that. We can see it moved up it's a percentage point and a half above that resistance line on the top of the wedge. We can see there was some amount of volume follow through on it. It's kind of hard to tell on the hourly chart. But then as of today, we're coming back and we're back testing this resistance. So the stuff is now lining up. We would have expected XLK and CL to have those very strong sell signals to line up with strong sell signals for QQQ and SPY. And we're not seeing that, which is why we're not incredibly bearish at this very moment. Now, going forward to next week, if we see on QQQ that the support, or now support, but prior resistance, if this gets broken and if we continue to see some impulsive selling, yes, then that's the kind of sell signal that we're starting to look for, that the bears have been looking for quite a while now. But again, it remains to be seen that the bears can actually gain control of the markets. And the last thing that I'll leave you guys on for this video is nat gas. We're taking a look at the nat gas futures here. Maybe we'll post an official trade on this. We'll see. But we're seeing a very good opportunity to long nat gas. Taking a look at the futures, we can see, we know that this 2.5 resistance support level is very strong. It has been a very strong support that has not been broken for many years now. But a couple days ago we broke it, but we just kind of limped through it, and so there's a very good chance that it's just a bear trap where people saw that this was broken. We get short sucked in, and then the market reverses right after that. And as of today, we broke back above that support resistance level, and along with that, we have very strong, powerful divergences on the MACD. We had incredibly oversold readings on the RSI. So the way that you could play this, we can see that this is the significant price level, this 2.5 level. So maybe you want to long it. You can long it at this point here where it is now. And you can set a stop just below that in case it does not continue. That would be a very non-arbitrary stop loss to set. So very favorable risk to reward. We have very little that we can go down before we hit our stop loss. But these divergences, if they do play out, they could play out in a very significant way. It's hard to exactly tell, but again, it looks fairly favorable right now. We'll see how it plays out. But until next time, this has been Spencer with Numbers Up Finance. If you like this video, please leave us a like, comment, subscribe. We greatly appreciate anything. Make sure you keep your numbers up.